What's up, guys? Welcome to another episode of Spilling the Beans. Today I'm sitting down with my buddy Nate Hirschberg, 2.0. He was on about 24 months ago, and a lot of things have changed in his business. He is doing multiple six figures a month in transactions, netting six figures, despite what's going on with the market right now. He and his partner kind of separated, went some different ways. He's kind of changed his business model, and he's navigating this brand new market. So I'm gonna dive in, I'm gonna pepper him with all sorts of different questions on what's working for him, because he's still making money despite what's happening and a lot of people kind of holding back and being worried about what's happening in the market. He's going deeper and having more success. So looking forward to sitting down with Nate. Nate Hirschberg, welcome back to Spill the Beans, bro.
What's up, man?
2.0, man. So we were just talking offline. You were here in March of 21, a little over 18 months ago, and a few things have changed.
Just a bit.
Personally, in the business side of things, and obviously in the market. So yeah, I want to dive into all that stuff. You got a lot going on. Super excited, super proud of like what you've accomplished over just in the past 18 months and the strides that you've made in a big way. So give me an update on what happened. You know, obviously Brian's a good buddy too, and you guys kind of decided, hey, you guys could do more or didn't need each other anymore from a partnership perspective. I think that's a perspective that a lot of people look at. Hey, I want to get into business to have a partner, just because I think there's a fear in a lot of people of like, I don't want to fail on my own, or I at least need somebody to bounce ideas off of. And then they realize, like I had a partnership, the values were different. What we stood for were different, and the amount of value that I brought to the partnership continued to increase. The amount of value they brought to the partnership continued to decrease, and then there was like this too big of a gap, and we ended up, decided to go different ways. So, how did you guys like come up to the notion that, hey, does this make sense to keep on partnering, or should we go in different directions?
Yeah, I mean, it's tough to pinpoint just one thing, right? I think, but like as a whole, again, he and I are still really good friends. I still talk to him very often, and I love seeing him win still. Like I truly do like seeing him win, which I think is really good. If you can part ways in that manner, it's always good. It doesn't always go that way, though,
Rarely goes that way.
But really, we just came down to like, how do we add value to the business? And it was almost identical. There was nothing that he could do that I couldn't, vice versa. And at the end of the day, just had a different idea of what lifestyle we wanted. Yeah. And that was perfectly okay. I respected his decision. He respected mine. And we actually made the decision in Tulum. We were sitting out there on the beach, and we're like, hey man, I think it's probably a good time to go ahead and part ways and do our own thing. And then comes all the fun stuff you have to sort through of what that's going to look like. But it went really well. And I think to your point, at some point you need to reevaluate your partnerships that you're in. You get into them and they're great, but sometimes they stop mutually adding value to one another. And it's good just to recognize that.
Was it sounds like you guys were very good at communicating with each other. So like what I've seen in other partnerships, what happened in mine back in 2013, 14, 15, was there were stories in my partner's head, or there were stories in my head. They weren't painful enough stories to then like attack and have a conversation, but it just started compounding. It started growing, and it started like, and then all of a sudden, my story in my head was completely different than the story that they had in their head, and it created this polarization that they believed some story that they made up in their head that wasn't even true, but just because they never addressed it with me and I never addressed what I was thinking with them, and it just created some sort of a divider that we could never get past, and it just kind of like blew up, and but it was because we didn't really communicate like that. We didn't have difficult conversations. It sounds like you and Brian always had conversations and addressed the difficult stuff.
Not always. I mean, like it took time and practice to have those uncomfortable conversations. And
you don't want to rock the boat, dude. When you're making money and you're like, well, I'll deal with a little bit of pain and a little bit of headache and a little bit of nonsense, because we're cashing big checks. But at the same time, it's like you got to have those conversations.
And all of ours came from good intent. Like I remember, oh man, if I go on vacation for 2 weeks and Brian has to run the whole operation, I feel guilty because now I'm passing all all the work on him. Am I now still entitled to 50% of the profit or whatever the case might be? It always came from good intent. There was never anything bad or wrong with our communication or our misalignment, if there ever was.
Yeah. No, that's good, man. So that happened in Tulum. What was that, like
June
of this year?
We parted ways in June of this year. Yeah, officially.
So, all right. So the market has changed pretty substantially as well.
Yeah.
A lot of times those external catalysts can assist with change in our personal lives or change in our businesses. How has the market changed for you guys? You guys were doing a lot of, you've been doing a lot of transactional stuff, a lot of wholesaling, a lot of flipping. How has that changed from the last time that we sat down a year and a half ago to what it looks like today?
Man,
two very different markets.
Two totally different markets.
Yeah. And you have never been through you got started, what, 3 years ago or something like that?
Four and a half years ago.
Yeah. So you've had a pretty good run up, and this is your first kind of like market cycle change. I can give you some background to, last one that I was in, but I'd love to understand, I think you have a lot of wisdom, even for being investing for 4 or 5 years, of the perspective and stuff.
Yeah, and I think I credit a lot of that to, like, I'm calling people who went through it. Mm-hmm. I'm like, hey, tell me what to do. I was going to
ask you, where do you get that wisdom
Tell
from?
me where to do. I'm not above calling up and asking you.
Yeah.
And I think that's something that people discount. It's like pay for proximity to power. It will save your ass. But how I've kind of adjusted is really getting picky about what I buy. If I'm going on title, if I'm going to flip it, it's going to really count.
Yeah.
I'm going to make sure I have really healthy margins. Like, we're doing a flip here on James Island. We're going to close on it December 17th, I think it is. I've been very conservative with my numbers, and we'll clear about 90 grand in profit on that. I'm comfortable with that because if I absolutely had to, I could keep it as a rental, but I've got a lot of equity in that deal.
So how are you underwriting? Dude, I mean, like, rates keep on going up. Every time rates go up, buying power comes down. That's for the end consumer and for the investor. So it doesn't matter if you're selling it and wholesaling it off to an investor who's going to flip the property, or if you're fixing it yourself and then putting it on the market for an owner-occupant. These rates continuously hiking up every single 30 days. That has pretty much happened all year. Like, how do you underwrite for that, for something that you can take down today and you're not going to put on the market until Q2 of next year?
So what I'm doing is I'm not using sold comps. 30-day sold comps, I'm looking at, but I'm not putting a lot of weight on them. I'm calling up agents that have stuff under contract now and saying, what are you under contract for? Did you have to give concessions? Did you have to buy down the rate? Mm-hmm. And then kind of taking that number and discounting that even a little bit more. That way I'm predicting kind of a little bit of a rate increase and maybe even a little decrease in value. And then also have the healthy margins in there, because I'm factoring in too, by the way, that I'm holding onto these assets for 6 months or so. 4 to 6 months. So that way the holding cost is real. When we talked last time, dude, I'd sell a house in 30 days. I'd flip that thing to an iBuyer. They'd pick that thing up, and maybe we only owned it for 7 days and we knew our profit ahead of time. That's just not the case today. So, to kind of directly answer your question, transactional, we're just making sure that when we do take down deals, they count. And then anything that's kind of outside of our buy box, we wholesale. We've done really good in assignment fees over the last 30 days. And, they're base hits. I think people turn away from, well, I don't want to do a $15,000 assignment fee. Well, it's $15,000 more than you had when you woke up, and it pays the bills. It keeps the marketing digging. So I'll take that all day long, man.
That's it, man. You got to keep the lights on. You got to keep, it's not about making money on that specific deal. And I tell people this with apartment buildings. Dude, it's about keeping the momentum going.
Right.
Continuing the momentum. See, your lender seeing you continuously take down deals, not being afraid of what's happening in the market.
Exactly.
Your title company doing the exact same thing. Your bird dogs sending you deals and keeping them fed, so that way they keep sending you deals, right? The people who are buying deals from you, if you're wholesaling it to them, they see you out there. Now all of a sudden you become a preferred provider to their network, when everybody else is flustered and trying to figure out, dude, just keeping the momentum going and keeping the motion, keeping things in motion is more important, dude, than the size of the check that you're
absolutely. Getting. And I've shifted too. I think some people are like, oh, I want to do 100 flips a year, 300 flips a year, and that's great. I've shifted to more quality over quantity.
Fuck yeah,
you know?
dude.
Yeah, I would do 50 deals a year and have nothing to be ashamed of there
Dude.
if they count and and they really make an impact versus 300 making $5,000 a pop. That's a lot of damn stress. That's a lot of moving parts, and I don't want anything to do with that.
Way too much. And you have enough diversification in doing 30 to 50 deals a year where if one deal doesn't close, you're not stressed out about it.
Exactly. Yeah.
So it's like, well, I do 500 and if one doesn't close, it doesn't even faze me. Well, like you get that over like 30 to 35 deals a year, it doesn't really adversely affect you. And I can tell you, dude, like we do probably 6 to 15 deals a year, right?
Yeah.
But I take down 1,000 to 2,000 doors.
Right.
In that. And so, yeah, it could swing things, but at the same time, I'm also buying and holding. I'm not doing the transactional side, so I still have the wealth that's being created because of acquisition fees, but more importantly, from principal pay down, from cash flow of the properties, the depreciation we get from those properties. So there's still a level of stability in what we're doing. Tell me about the types of deals that you're doing. Has that changed at all? Are you going for properties that are like maybe a lower price point now, or certain different area classes?
I'm looking at area more so than anything. Like, where are areas that are desirable? So
that's more important now than it's ever been because
and I think the reason for me, and this is how I created the logic in my head, is one, the more people are moving there than leaving there.
Yep.
And two, if I have to keep it as a rental, usually in those desirable areas, the rental rates are higher.
Yeah.
So even if interest rates go up and they continue to go up, I can either cash flow on long term, which I'm underwriting under long term, but I can also do short term and really maximize my gains. I got 2 deals in Myrtle Beach right now that are kind of hanging out on the market. And I might just simply take those down and short-term rent them, and they'll crush it.
All right, so if you get a hard money loan, what does that exit look like on your hard money that has to be paid back in, let's call it 6 months?
6 months, yeah. So one, I think it's super important to be constant communication with your lender. If you have a hard money loan and you're approaching that maturity date, don't ghost them. Tell them, don't ghost them. That's the worst thing you can do. Call them.
Because then they assume the worst.
Of course.
Then they're like, oh, this thing's going bad, this thing's going south. And then they start telling themselves a story.
In their head.
Let's prepare for this or that. Like the communication when things are going bad builds more credibility for you and more trust for you with that lender than tell them that everything's good to go.
Yeah. So call them, tell them what's going on. And I've been doing that. But what that looks like for me on the exit is, again, I bought right on the beginning. So I can exit that asset, get a loan for long-term debt loan for 75% loan to value, and probably be right now truthfully like 8% interest rate. Mm-hmm. But I can hang on to that asset instead of just letting it go. We were talking earlier. I know a lot of people that they're just like taking that thing and I'll take a $10,000 loss here or $15,000 loss here. Well, dude, you spent time to get the lead. You spent time to renovate the property. You spent time to put it out on the market. Why not see it through, put a tenant in there, let it appreciate. It allows you to get depreciation instead of just taking an L and moving on. And now you got to go find another lead and hope it doesn't end the same way.
If it's a good deal. I 100% agree with that, man. I think, sometimes you do need to cut your losses, but if you have a good area, a good property in a good area that's going to be desirable or is desirable, just not enough to get the price point that you were hoping, that you bought it at 6 months ago, dude, totally expected. And we were talking, you might have a hard money loan on it, and hopefully if you bought it and you increase the value on that, let's use some round numbers. It's worth $300,000. You earned it for, what do you think, $240,000?
Yeah.
Okay. So you're into it for $240,000. It's worth $300,000. You can go get a new loan. It might be 8%, but and let's call it 70% loan to value. You're really only bringing $30,000 out of pocket in order to hold that property.
Yeah.
And instead of you coming up with $30,000, why not contact a private money lender and say, hey, will you give me $50,000? I'll give you a 10% return on that. Dude, that's $5,000 a year.
Yeah.
Right? And you now take a $20,000 acquisition fee.
Yep.
Kick them, 10% a year and give them 10%, 20% of the upside in the deal too.
Yeah.
Dude, and now all of a sudden you're all into this thing for $250,000 instead of $230,000, but you have $20,000 in your pocket.
Yep.
You still own 80 or 90% of the deal, and then you have long-term debt in place where, again, you're paying down principal on it, letting it appreciate over time, and you have the depreciation that
Yeah.
offsets a lot of your active and earned income as a full-time real estate professional. So, dude, I think that's an amazingly smart thing to do, and it's an exit strategy that a lot of people are like, well, I don't know what to do. I can't go get a bank loan. Like, there's a lot of lenders, Whit McCarthy. I just had him on episode of Spill the Beans with Civic Financial. Dude, they'll give a 70% LTV loan based on the asset, not necessarily based on the borrower.
Yeah.
They don't look for tax returns or anything like that. And it's 70% based on value. And so if the cash flow's there, dude, you're getting a loan, and it's like a point more than what you would get from a typical bank.
Yeah, it's not much. I mean, and we were talking like, I think over the last 18 months, maybe a little bit longer, there's only been one play you have to run, right? Fix and flip. And you can even put a crappy product out there and it would still move.
Yep.
Like, people who understand creative financing and people who can pivot and get creative and are talking and having these conversations are going to be okay through this next period of time. The people that has continued to try to run that one play and get their teeth kicked in over and over and over again, I think unless they're really liquid, they're probably going to feel the pain pretty bad.
Dude, I think you're 100% right, man. I love that analogy too, of like running the same play. Dude, eventually the defense becomes smart enough where they stop and they stop and they stop, and you can't keep on running. You got to have multiple exit strategies. You got to have multiple arrows in your quiver that you can use as these things change. Dude, like when I just dropped a video on like the Burr method. Does the Burr method still work? That was my strategy for 2015 to 2020 or 2021. And guess what? The market changed. And that's actually a long runway to do any one strategy. You can still do the Burr method, right? But dude, when I first got started in 08, 09, bro, it changed like every year. There was bank-owned properties, or at first it was short sales. Then it was loan modification. Well, first it was loan modifications. Then it was short sales. And then it was bank-owned properties. Then it was like the turnkey business. Then it was, and it just kept on changing and changing. Every couple years, you needed to pivot your business based on where was the money, kind of following the money flow, and that trained me pretty well in a lot of different exit strategies. Where now I understand creative finance because there was fucking no money anywhere 15 years ago. You couldn't get money there were deals everywhere, but there's zero
no
money out there. At least for a punk 23-year-old kid who'd never done a deal before, right? And so so I had to get creative on financing. But then the past 5, 6, 7 years, money's been all over the place. Deals have been pretty prevalent as well up until like the last year or two. And so I never needed to do the creative finance. Now I'm pulling all and dusting off all these strategies that I used 10 years ago to acquire properties and initially build my first 10 rental units. And we're doing it all just at a higher level today, dude. And we're getting into all sorts of cool creative deals where now we don't have to deal with a bank. We don't have to deal with submitting financials on an annual basis and debt service coverage ratios because we're going in with seller financing. And if shit hits the fan, we're talking to an individual as opposed to like a board of directors that's telling you, does this fit their box of do they want to continue making this loan or not? And so like that whole creative financing side and being able to raise money is a big deal, dude, because if you can't raise money and you're just sitting on equity, that's how a lot of people lost their ass, is because, well, I got equity in these deals, but you can't pay bills with equity, right? You can't pay tax bills, utility bills, your vendors, your suppliers, or your team with equity in deals. You got to have some sort of access to capital, and got to be able to recapitalize your deals and or structure them in a way that's going to set you up for success as we go through, seemingly tumultuous times.
Yeah. I tell people all the time, like when folks have a small education platform, and I tell them all the time, build a brand, post what you're doing, because that's how you build your credibility.
For sure.
If no one knows who you are, what you're doing, what you need, one, they can never help you. But two, you can never build your cred. And if you do need to raise private money and you have credibility in the marketplace, people know you, they trust you and like you, it's going to be a lot easier than if they've never heard of you whatsoever.
Dude, the first thing that I do whenever I meet somebody new is I go and look at their Instagram and their Facebook. And I try to figure out, who are they? What are they posting? Are they psycho conservative or psycho liberal? Are they talking about aliens and shit? Like I don't know. And that, but I make a decision based on what their social media looks like. Hey Tim, will you be on my podcast? Oh well, I got 103 followers on Instagram. Like versus somebody who's got 300,000 followers on Instagram. Dude, it gives you credibility versus lack of credibility.
That's right.
And so how is that different? Because, dude, I don't think there's anything better we could be spending money on and investing our money in than our personal brand and our own business right now.
Yeah.
You know, like there's a lot of like, should I buy storage? Should I buy multifamily? Should I buy triple net lease? Dude, the best return on your investment is in yourself, your own education, your own brand and marketing, and in your own business.
Yeah.
You know, like you going and giving me $100,000 for a deal. Hey, great. Here's your $8,000 a year. You know, with a little bit of equity, and that's cool. That's okay. But at the same time, I'd rather see you put $100,000 into your own personal brand.
Yeah.
And dude, that's going to pay you $800,000 over the next 12 months because of deal flow, money that comes from it, and opportunities that come.
100%. I mean, masterminds and investing in myself and the business has been the catalyst that has taken me from down here to up here in a short amount of time. People ask me all the time, well, how do you have such rapid growth? I paid for proximity to power. I listened to what people were telling me to do, but most importantly, overall, I took action behind it. You know, I know a lot of people that go to these events and they keep talking about what they want to do, and every time you see them, they're talking about, I'd love to do the same shit. You just got to take action behind it. But at the end of the day, dude, no one can take your knowledge away from you. And you know, not to go all the way back, but when I basically started over again on my own, was there a little bit of pit in my stomach? Like, I think I can do this. I've done it before. But it's just like it accelerated the results so much better because I knew what to do. I didn't have to think. I knew how to set up the systems. I knew how to pull the data. I knew how to do everything. And it's just rinse, wash, repeat at that point.
Dude, and those, having that knowledge creates a level of confidence to then go and take the action, you know? But sometimes you don't really have all the information. You just got to go and take action. You learn better by doing than you do by just reading about it in a book. But you got to be doing both of them at the same time. You got to be getting educated. You got to be taking action. And I agree, man. Everything changed for me. My trajectory was kind of, dude, guys like you are going to be successful no matter what. Most people watching this are going to figure out a way to be successful eventually.
Yeah.
It's like, how do we expedite it? How do we amplify it? How do we shorten the time frame that takes? And the reality is, getting into the rooms, right? Getting into the rooms where the people are out there doing big things, and then tagging onto their resources. Hey, Tim, you've seen a market shift before. What did you see last time? Boom, 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 boom.
Yeah.
Now you know, not only am I giving you strategies on how to go out and make money, but I'm giving you strategies on how to not lose
That's
money.
right.
You know?
Yeah, 100%.
And there's relationships in my world where you're like, hey, Bratz, I need a hard money lender. I need a private money lender. I need, you know, what software, or this or that or whatever, like who's somebody I could talk to in order to train this person. And I'm like, dude, there's relationships in my world of people who have been investing and lending me money for 10, 12 years that have taken me that long to create that relationship. And I can make an email introduction or a phone call introduction for you with that person, and all of a sudden you have instant credibility. That took me 12 years to develop. Just because I transfer that trust that they have with me to you, and now all of a sudden they're investing in your project. Bro, that's how you shorten timelines.
100%.
That's how you take 12 years of refining a relationship and developing trust and developing respect, and you consolidate it into a matter of 6, 12 months by putting yourself in those rooms of people who have already developed those relationships. And you show that you have similar core values, that you do what you say you're going to do, you have that integrity. And dude, you show up like that, and all of a sudden they're welcoming you into their world and their connections and their resources. And it's a complete game changer.
It is. Yeah.
Dude, it expedites everything. So tell me about the education side of things, dude. I love that you're doing that because, one, you're making a huge ripple effect. And at the same time, it helps your students out because you're partnering up with deals with them or investing in their deals. They can invest in your deals, and all of a sudden it creates more of that momentum for everybody by doing that. So how did this come along? You know, what hurdles have you come across in the consulting business, and how are you refining that?
So starting from the top, like how it even came about was I was literally just posting with no intent. Here's what I'm doing, and the messages would trickle in and was like, hey, do you offer this? Do you offer coaching? Do you offer mentoringship? Can you do that?
Can I hop on a call with you?
Can I pick your brain or whatever? And then and I kept saying no, that I didn't offer that. And then I forget who I was talking to, they're like, dude, you should really monetize that.
Yeah.
So then I was like, okay, how? And at that point, it was hard because you don't really in the beginning know your worth, I think. So you're like, well,
You got that
what the hell do
imposter
I even
syndrome. Well,
charge?
there's people who have been doing this for 15 years, right?
Yeah.
And no. But dude, that's a story because there's people who have been doing it for 15 years, but that means they're 15 years older than you,
Right.
And
Yeah.
somebody who's your age is going to associate better with you and listen to you better than they would ever listen to them. And
100%.
So it's like, you got to understand that there's a certain type of person that you attract that's
Yeah.
very similar to you, that you can convey your message to, convey the information to better than somebody else can, you know? And I think you're doing a disservice to people if you're not sharing that knowledge and sharing those opportunities.
For sure, dude. I mean, so it really just started with, hey, I'm gonna take 5 people, and we're gonna mentor those 5 people.
Yeah.
And then that turned into, okay, we're gonna refine the structure one way or the other. And fast forward now, I changed the structure completely.
What does it look like?
So right now it's a flat fee per month. We meet, I have 2 different levels. You can either do the deal room where we meet 1 time per week and we cover a topic like today.
Is it one-on-one or is it group?
One-to-many group, yeah. So all
Dude,
Zoom.
That's the way to do it.
For sure. And it's been really cool because I can see an impact. You know, people like today, we're going to meet at 1 p.m. It's every Thursday at 1 p.m. And we're going to be setting goals for 2023 and getting actually like, how can you really do stuff now to position yourself to win in 2023. Last week we talked about creative financing. So there's that one, and then there's a more intimate one where we meet twice a week. It's a smaller group. It's still one-to-many, but it's like 6 to 10 people versus 30.
And by the way, just to address this real quick, everybody thinks they want one-on-one coaching.
Yeah.
Dude, one-on-one coaching is not better than
not.
group coaching. Everybody like, oh, well, I want the attention. Dude, you still get the attention in a room of 6 to 10 people.
Oh, yeah.
And it's actually better attention because now you just don't have one person's perspective. You have 6, 10 people's perspective and offering insights. So you still get the one-on-one communication and working through your problems, but you get more perspective. And then all of a sudden somebody asks a question that you didn't even think about that's going to help the trajectory of your business.
Absolutely.
Dude, that was a big fallacy in my head, is like, I want one-on-one coaching. No. As soon as I got into a room with 15 people, and I saw how much more power there was and how many better questions they were asking than I was asking, I realized, like, dude, this group stuff is way more powerful.
It is, too. And it's been really cool to see. I mean, so between everything, I've had people quit their W-2 jobs. I've had people...
Awesome. Dude, isn't that so rewarding?
It's so rewarding.
Yeah.
Dude, I'll never forget the first time someone was able to quit their job, and they called me, and they were like, dude, thank you so much. And I'm not an emotional guy, but I was like, damn, this feels really good. And that's why I really do it. Like, you know, people are like, well, what is your why behind doing it? I like seeing the impact that it makes in other people, and truly seeing them win. You know, and to your point, like, I've gotten so much more out of one-to-many than one-on-one vast majority of the time. I had somebody call me one time. They were like, hey, can I buy 50 one-on-one sessions from you? I was like, you don't want that. That's exactly what I said. I was like, you don't want that. I was like, how about this? Let's do 3. And if you still think you want 50, we'll reevaluate it. He's like, dude, thank you so much. Yeah, like,
well, dude, you got to pay for one-on-one, right? Versus 1/10 of that cost, and you're getting more value out of it. So I think from a coach perspective, I know what delivers more value, so I don't even offer any one-on-one anymore.
You know how many people would have taken his money though?
Yeah, exactly.
You know,
and the other thing is, like, you can't teach somebody how to scale their business if you're doing one-on-one coaching.
No.
Meaning, I need to show how to run a friggin' business.
Yeah.
And one-on-one coaching isn't scalable from a coach's perspective.
It's not.
So it's like, you got to do one-to-many, and like, in order to, you know, like, somebody who's doing one-on-one coaching typically isn't that good of a coach because they're not doing what they're not practicing what they're preaching, kind of thing. You know what I mean?
Yeah.
So it's like, you got to find somebody who understands how to run a real friggin' business.
Yeah.
And if their shit's dialed in, then you're like, that's the coach that I want. Even
100%.
though it's not one-on-one, I can get into a small group setting. That's the differentiator.
Yeah. No, for sure, man.
Yeah, I love it, dude. So what is the next, as we're moving into this, you know, changing environment? It's already changed a little bit. What are you seeing for 2023, or what is kind of like the game plan? And I know nobody's got a crystal ball, but let's talk through, like, what does the strategy look like, and how are you going to maintain flexibility?
So strategies a little bit different now. You know, again, like you said, no one has a crystal ball. I wish if someone did, they'd be incredibly rich. But wholesaling more, kind of getting out from taking title on everything, that was always the move. Wholesaling more, we've always been fortunate to build relationships, so have a good buyers list. I'm fortunate where I have a great team that are just ruthless. You know, my acquisitions guy, Devin, he also staggers on the dispo, and he loves it. He loves doing both ends of it, and he's really good at it. And having those key players, I think, is critical as you scale. But wholesaling a little bit more than flipping. Like I said, when we do flip, and we still will, making sure it's a good buy, but actually putting out a good product. Like right now and for the foreseeable future, you cannot put out a crappy flip.
Yep.
You'll just get destroyed.
Yeah. I mean, you see them, man. If there's anything wrong with the property, it's sitting on the market. The 100%. The ones that are done really well can fly off the shelves.
Fly off the shelves, yeah.
Yeah. And so it's hard because you're going against the grain. You're like, well, I don't want to put as much in because the market keeps on pulling back, and I'm gonna have to sell it for less.
Yeah.
But if you do that, you're shooting yourself in the foot because you're not putting out the best possible product, and so that way, it's a self-fulfilling prophecy of you thinking I got to put in less because it's going to sell for less, and then it does sell for way less because you didn't put in more on the upfront. You know?
And the secondary point to that is like, and we were talking earlier, if I renovate these things right and I don't cut corners, I replace a roof if it needs it, I replace an HVAC if it needs it, so on and so forth, and it looks really good, not only will it attract a higher level tenant if I do have to take it down off the market and rent it, but if I have to short-term rent it on Airbnb, it's in a desirable location and it's a desirable property, it'll cash flow.
Dude, it's a good, if that's your worst case scenario, that's a hell of a worst case scenario, right? It's a really, really good worst case scenario of what do I do with this property. And again, I think going back to that, having multiple exit strategies is so important of like, hey, if I can wholesale it and pop $20,000, boom, we'll do it. If I flip it because I can't wholesale it and I make $30,000, another good exit strategy. If I can't do that and I need to, turn around and then do a short-term rental on it, great, I'll have great cash flow. If I can't do that and I have to put a long-term renter in place and it still cash flows, dude, that's 4 different exit strategies that are all wins across the board, and you're not losing money on any of them. You got a great asset long-term, and you can ride out any sort of economic turmoil if the cash flow's there. You know, so again, it goes back to having multiple exit strategies, multiple plays in the playbook, and setting yourself up for success. So, dude, this has been super, super valuable.
Thanks for having me back,
Appreciate you coming. Yeah, man, absolutely. And we'll do it again. I want you back again in another 12 months, and let's see what's happened in 2023.
Love it.
And be able to reflect, because this is it's so cool to like kind of say, hey, here's what worked. Here's what I thought was going to work. Here's how it turned the other direction. Because dude, I remember in 2020, when COVID hit, everybody was like, this is the end of the world, and it was the hottest friggin' real estate market anybody's ever seen, and nobody predicted that. Nobody, not a single analyst on for any of the hedge funds or anywhere that was talking about anything online, and people were just mind-boggled. But so who knows? But having multiple exit strategies get you through whatever the economy, whatever the market throws at you, you can ride it out.
Absolutely.
So, appreciate you, bro. Proud of you.
Man.
Congratulations on everything you got going on. Make sure you guys connect with Nate. He's got a bunch of good stuff. Follow him on social media, and if you want to check out his coaching platform, definitely reach out to him there. See you guys next time on Spill the Beans. I hope you guys got a ton of value out of that. Make sure you're following Nate. Make sure you're connected with him. If you really fit his vibe, connect with him on the coaching side of things. He gives a ton of value and leads with value all the time. So he's an absolute rock star, huge asset. He's a member of Legacy Family, my mastermind. Just an all-around great guy. So connect with him. We'll put his contact information in the show notes below. And please do me a favor, like the video, subscribe to our YouTube channel, and post in the comments below. Give me what your biggest takeaway is, any sort of questions that you might have for me or for Nate. We will answer those questions and create some content specifically just to answer that for you. So until next time, be your best.